I do speak to a lot of mega billionaires and public companies about it, and I make a few points on this. One, that $320 billion, that is destroying $32 billion a year. They are destroying $3 billion a month in capital because they're generating a 3% after-tax yield at best, and the cost of capital is 15%. So take 12% negative real yield on that. That is the cost. Multiply $325 billion times 12%. That's what the shareholders are paying right now for that. The second point I make is, if you look at Microsoft, for example, 98.5% of the equity value of Microsoft is based on forward expectations of quarterly earnings. And 1.5% of the value of Microsoft is based upon tangible liquid assets. And another way to say it is Microsoft is 144 times levered to their quarterly earnings. If they earn $3 billion a quarter or X billion, whatever the number is a quarter, more than that, I guess, but you multiply it by 144x, right? And if they miss by $1 billion, it's 144 billion where you move. And the reason why operating companies are like that is because the SEC 33 Act and the SEC 40 Act required that operating companies hold no more than 40% of their liquid assets in securities. So normally they'd use treasury bills. And treasury bills, as we just showed on that chart, are toxic. It's toxic capital. It's poison. You might as well just inject poison into your veins, right? You're bleeding 10% of your capital a year. So they don't keep the capital. And Bitcoin is a major revolution because starting in 2025, you can account for Bitcoin on fair value basis, which means that Bitcoin is just as good as treasury bills. And it's a commodity, so you can have 100% of your balance sheet in Bitcoin. And what that means is Microsoft, if they just stopped dividending out their cash flow and stopped buying back their stock and they convert it to a Bitcoin buy, and you crank in like a conservative, like a 21% assumption, like half their cash flow in Bitcoin, you make $1 trillion over 10 years. You know, you put all your cash into Bitcoin, you make $2 to $4 trillion for the shareholders.
If Berkshire did that.
No, if Microsoft did it.
If
Berkshire did it, they would make more. If they flipped that, you know, put $300 billion into Bitcoin and grow 21%, you're generating $60 billion a year of investment income. I talk to people like Similar Scientific, you know, where the CEO calls me and says, I want to talk about what you did, explain it. And I'll get inbound calls from people that want to be on a Bitcoin standard, and I'll explain what we did and how we did it. And sometimes I'll brief the board of directors or the officers and directors. Sometimes it's politicians, sometimes it's governors, sometimes it's senators, sometimes it's congressmen, sometimes it's... I'd be willing to bet you that if I had an hour alone with Buffett in a calm environment, I'd walk out and he would say, this Bitcoin thing's a pretty good idea. Charlie would have liked it. We're going to buy some.
Have you made the cold call?
I have not.
Why not?
Because Bitcoin's on a need-to-know basis, and people have to feel like they need to understand it, like they've got a problem in order to have an open mind. And if they don't acknowledge they have a problem, they don't have an open mind, and they take a conventional view toward the world, it's like the people with a strong corporate view and a healthy company and a strong conviction in their company, they don't have an open mind to a profound paradigm shift. They don't want to embrace that idea.
Maybe the call to Buffett could be seen as a public service, and you want to be a public servant. So if you were to make that public service phone call and you guys sat down and spoke and you went to Omaha and all of a sudden he comes out and says, you know, we've made a decision to buy $100 billion of Bitcoin after my conversation with Micheal Saylor. I think that's a public servant.
I will say for the record, I'm happy to go visit anybody that has $100 billion of cash that's sitting and burning $10 billion of shareholder value a year. I will go visit you. I will provide you with all of the information you need in order to be convinced that you should flip to the Bitcoin standard. So, I mean, first of all, it's Senator Lummis, Cynthia Lummis, has put forth the proposal that the United States establish a strategic Bitcoin reserve. It's a brilliant idea that she's presented to the Senate. The geopolitical logic here is simple. It's go where all the money is going to go and buy it first. And so if you knew that everybody was going to move to Manhattan and you could buy 20% of Manhattan in 1650, it would be a good idea. But maybe more to the point, the British came to the New World and they grabbed the New World, and that's what created the British Empire. So the United States runs the world's reserve currency, but Bitcoin is emerging as the world's reserve capital network if you just want to keep your money forever. And Everybody in the world loves that idea. I'd like to just keep my money forever. So the smartest thing for the US to do is to buy up as much of that as they can. So you buy 1 million coin, that's 5% of the network. Buy 4 million coin, you got 20% of the network. Why not buy 20, 25, 30% of the network? If you buy the network, you can buy it for money which is effectively free. In fact, you could just sell the gold, swap it to Bitcoin, and then as Bitcoin becomes $200, $300, $400 trillion asset, right, you're sitting on anywhere from $40 to $80 trillion gain. And so the logic of this is pretty clear. First of all the foreign capital in the world is going to be drawn into the Bitcoin network. So if the United States owns it, then that's like the same as the money coming to the US. You're just drawing capital from Russia, from China, from Africa, from South America. It's going to come to the US on the Bitcoin network if the US owns it. The second logic is all the capital from the 20th century is stampeding into the 21st century. So all the money that was invested in crappy bonds and decaying real estate and warehouses falling down and companies that are going out of business, all that money is going to go into the Bitcoin network. So you own the 21st century. And the third idea here is right now, a lot of people use US sovereign debt as their capital asset, which, as I just pointed out, is minus 5%. Every business person knows it's not as good as the S&P index. So if people start to swap out the treasury bonds and they start to buy Bitcoin with it, then you would want to own the Bitcoin because that way you don't have to worry about people replacing the US treasury asset with a Bitcoin asset because the US owns Bitcoin too. So this defends the U.S. reserve currency status. It defends U.S. economic leadership. It attracts capital from our enemies. It attracts foreign capital. And it actually lays in place a peaceful, equitable solution to working out our differences with everybody in the world that a business person would appreciate. So yeah, like if you could buy Manhattan for free with 60 guilders or some glass beads or something, and you knew that it was the best port in North America, and one day all of Europe's going to come and do business North America, it would be the best investment going.
How big of a victory was when you talk about the red wave when Trump won? And how different would the climate be today? Bitcoin right now is at what, 90, 91,000, 92,000, 89,000, whatever the number is. How different would it have been if it was a Kamala victory?
I think if you look at the difference between a red wave and a blue wave, I'll take the blue wave first. If it had been a blue wave, Bitcoin would grind up plus 20, 25%, 30% against resistance. And the rest of the digital assets industry would degrade down 20%. Like every digital exchanges, digital tokens, digital securities, digital currencies, they would degrade and Bitcoin would grind up. And there would be that tension that you see right now for the last 4 years where Bitcoin is grudgingly accepted, under protest, and the other ones are being attacked all the time. But I think the red wave was the headwind becomes a tailwind. Bitcoin surges up, not plus 20, but maybe plus 50 or plus 60. I think, we go from that to this. And then the digital assets industry goes from degrading down to surging up. It goes from minus 20 to now it's coming back. Now, there's a little bit more uncertainty with digital assets because we got to wait till next year to figure out what the framework will be. But basically, the polarity got switched from negatively polarized on the entire digital assets economy to positive with the red wave. And I think you just got to have a much more bullish view toward growth and prosperity and innovation in the next 4 years than you would have had in a blue wave.
Okay, so what do you think is going to be by the end of Trump, give or take? If you're saying in 21 years it'll be 13 million, you're saying it'll be at 100,000 by the end of the year. What do you think it'll be by 2020?
I got a Bitcoin 24 model that's actually published on GitHub. You can Google it. And if you Google it, you can download it. And then you can crank in your assumptions and see our base case assumptions. And I think my base case assumptions, and it actually spits out the price of Bitcoin every year. And to tell you the truth, off the top of my head, I don't have the exact number for the end of 28. But I can tell you basically the model says it's like 55 growth to 52 to 50% a year.
Got it.
So it's like 50 to 45% growth a year for the next 4 years. And that's like doubling every 18 months or less than 18 months in that range.
I got it. So roughly 350. If we were to say $300,000 to $400,000, that's about the number.
I wouldn't be surprised.